Hello everyone, welcome back. Welcome back to our investment synthesis design for institutional grade discourse. And today we're gonna dissect Morgan Stanley's May 2026 update on Walmart. And the ticker is WMT. Okay, let's take a look at this report. Morgan Stanley reiterates an overweight rating and $150 price target for Walmart. The core thesis rests on WMT's transition from a legacy brick and mortar retailer to a high margin technology and a logistics orchestrator. Analysts expect a modest upside surprise for the first financial season in 2027 earnings report, driven by the accelerating momentum of the e-commerce flywheel. Well, the Q1 flywheel effect. All right. So about this report, the Walmart rating thesis. Let's take a look at this. It's very fresh, right? It's very fresh. On May and the 10th, Morgan Stanley deep dive into Walmart. In the era of macro volatility, WMT is being framed not just as a defensive play, but as a high quality compounder. Right? We can see here the company's enduring scale advantages, expecting price gaps, sustained market share gain, and leadership in e-commerce. And here, high quality compounders with defensive attribute. Well, we know that the conflict between the US and Iran, right, make the market more volatile. However, then we will take a look at this chart. Take a look at WMT's chart. We can see that it have a very strong defensive character. And Walmart's scale is hitting a tipping point where its tech advantages, specifically the 3P marketplace and advertising, are finally decoupling profitability from traditional foot traffic. The stock is currently trading at roughly 43 PE ratio, a massive premium to its 10-year average. Is this valuation justified, or is the market overestimating the flywheel effect? Let's look at the numbers. And you can see that 43 PE ratio, right? Approximately 21 times premium to its 10-year average. Right? A little bit high, but as a consumption stocks, a little bit high, but as a high-tech stock, it's usual. It's very common, right? Well, the core highlights here beyond groceries. Here we go. First, we understand the 3P marketplace is doing well. The third-party marketplace is performing exceptionally well, serving as the essential backbone for Walmart's alternative profit model. Secondly, WMT is beginning to export its US successful advertising and marketplace model, business model, to the international market, potentially unlocking global margin expansion, right? And here, the AlphaWise survey data suggests Walmart Plus membership has hit record high, reinforcing customer stickiness. Well, we can see here the e-commerce sales growth of 27% and Walmart Connect advertising income growth of 41%. Very strong, right? Okay, all of that, it is about the benefit to the stock. All the benefit show logic to support the stock going higher and higher and play a greatly defensive role in this volatile market, right? And as a professional team, we must flag the crash in the optimism, right? Well, we know the bullish point. We also need to have some doubt in the logic because there are still some risk. All right. And firstly, the gas price blind spot is about the gas price. Let's take a look here. Wait for a second. Yeah, should be here. Yeah. So here, why WMT has raised FY guidance after the first financial quarter in 3 of the last 4 years. We believe that the financial quarter in 27 expected outlook will likely remain unchanged for now, mainly due to the recent spike in gas prices. Well, the analyst of Morgan Stanley also admitted that the F27 outlook likely remains unchanged due to the recent spike in gas price, right? So gas prices potential selling on discretionary spend that the report treats as a minor friction rather than a structural threat, because it is the cost, right? When the gas price goes higher, the cost of Walmart could also get higher, right? And the second one, second potential risk we need to talk about here. Although pharmacy will represent a headwind of 100 basis points overall due to maximum fair price implementation, right? The reports know that 100 basis point headwind in US comes due to maximum fair pricing. And the shift toward lower price generic GLP-1 prescriptions. So if the trade down to generics accelerates faster than expected, it could cannibalize pharmacy revenue more aggressively than the current model suggests. Right here, while continuing to grow with higher income households and evaluate its general merchandise assortment. And the commodity pressure. Commodity pressure is gas price is one of it. Gas price is one of it. Here, we need to talk about it for a second time. Yeah, because there's a 1 billion annualized headwind looming from diesel and the freight costs at current prices. Morgan Stanley expects mitigating actions, but in a tightening consumer environment, passing this cost through is never a guarantee. All right. Well, we have just known that Morgan Stanley have given us several benefits to support WMT stock price, right? And we have also mentioned about the risk from gas price and the pharmacy, right? So it is all about fundamental. Let's talk about another thing. Let's take a look at this chart. Should be here. Yeah, here is the chart from TradingView. Oh, we just said that Walmart plays a really good defensive role, right, in this volatile market, and we can see that it has a very long term and a strong upward trend. Everyone knows that in great investors like Warren Buffett really prefer consumption sectors like Walmart, Costco, right? Walmart is one of the best groceries stock, right? And it has a very strong upward trend. So there's no doubt that we need some reason to buy some shares of Walmart. For example, we can see the chart that from the chart we can tell this price action upward trend. And hey, take a look at the RSI. RSI is very stable, right? It didn't enter the overbought zone, so which means that now at least in the short term, Walmart is a good stock to enter, right? Very stable upward trend. Okay, it is all about Walmart recent fundamental benefits, and we just took a look at its chart. Technically, it also a very good stock, right? Okay, that's all. So if you have any question, please leave a comment, and don't forget to click the like. All right, we can talk about it. We can argue about Walmart one by one. Okay, that's all. See you next time.